Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, let's take a look again at the euro currency. Well, due to the holiday in the United States, yesterday, President's Day, the trading session was really anemic, so markets were closed in the United States, and here you see the result. We have the inside trading session of to the Friday's day, and that is also the doji. So market stands in some indecision action. Now you can see that market is forming some sort of that sort, some pattern that is now also very tight range of the consolidation. But in general, our trading plan that we have discussed in our weekly research is still valid. So I think that market could continue move lower, at minimum to the complement of the ABCD pattern to this cluster support area that we have said. That is daily oversold, confluence support on the daily time frame, and take a look. Weekly pivot support 1 stands around this area. So that area, it's a bit wide. So from the 132.20 area to the 132.50, maybe even 70 area. It's a bit 50 pips range of that support. But it includes a lot of different indicators that create significant level. Still, that is about the 100 pips move. So if we will find nice point to enter short, that could be some sort of the scalp trade or day trade on the euro currency. I have the suspicions that probably market should show a bit deeper move after consolidation, after the indecision sessions, when market is showing the overlapping bars. Very often leads some acceleration. So I hope that this acceleration will be to the downside. On the 4-hour time frame, we see what the current consolidation is. That is the bearish pennant that is forming. Well, let's take a look at the potential target of this pattern. So if we will base the initial extension A, B, C top, we'll see that that was the 100% retracement. This market has reached just one by a single move to the downside. 127 has been touched right here. Consolidation. The next target stands at 1618 extension around 132.47, I suppose, area. This area. That is also the lower border of this previous consolidation of the market. And take a look, that was very close to the weekly pivot support 1. So that target seems reasonable. If you'll take the most recent pattern, that A, B, C, D, or that one, you will see that 100% extension stands also very close to this area. Finally, the extension of that retracement swing stands at 127 right here. So you can see market has touched it. And 1618 extension coincides with the 1619 extension of that ABCD pattern. So that stands in the same area. Speaking about the classical approach to the trading of the pennant, if you will take the mast of the pennant and count it to the potential breakout, you will get approximately the same area. And in general, that level where market stands is the 618 extension from the greater ABCD. So if we'll take a look at the daily time frame, from that ABCD, that will be the 618 target, minor target. So some shallow retracement or consolidation could follow, and that we'll see now on the market. How we could deal with this pennant? Well, recall that previously we have suggested some deeper retracement to the upside. Why? Because that is the divergence, as you can see with the MACD indicator. That is the 618 minor target of the daily ABCD pattern, and on the hourly time frame, it previously it has looked like the potential of the double bottom, and double bottom pattern suggests suggest some deeper retracement to the upside. But currently this pattern has been vanished by the price action, and I tell you more than when I yesterday have observed this price action on the hourly time frame. Initially it has looked like possible diamond. Strange but curiously, but in the recent times hourly charts of the euro currency shows a lot of diamonds, if you could say, because you probably remember how we trade this pattern about a month ago, so it's rather often. Well, and I thought that if it will be the diamond, yes, we will get some deeper retracement, because usually after the diamond, market could show the move to the upside as it was to the downside. There's equal distance, so that leads us to the significant resistance that we have discussed in the weekly research. But when market has exited from this diamond pattern just flat, without no attempt to show the thrust move to the upside, the possibility for deeper retracement to the upside now looks blurry. So I think that hardly market will show some strong retracement to the upside, because this price action doesn't suggest it. Well, maybe this is due the lazy market on Monday. Who knows? Maybe this is the reason. But in general, the current price action tells that market hardly will show some significant retracement by now, because this is bearish pattern. So reasonable to assume the potential move to the downside, because the target stands rather close to the current price action. The market has no, in fact, has no support, significant support below this consolidation. So I prefer to see some move to the downside for the 100 pips approximate. Well, how we could enter with this pennant? The major risk dealing with this pennant is the failure breakout to the upside, because market hasn't tested the weekly pivot point yet. So market could show some attempt to touch this area and shift the pennant to the flag. So if market will show some a bit higher high, then probably it could turn to the flag consolidation extent of the pennant. Well, that's the risk. That's why one of the potential ways how you could enter it, use the stop entry order. So if market will start move to the downside, you could try to enter with the stop sell. That is one of the possibility, because if market will turn to the upside and will show the upward continuation, you could be trapped if you will decide to enter right inside of the pennant or right around the weekly pivot point or somewhere else. But if market will start move to the downside and you will enter with the stop order, then your major risk is that this will be the failure breakout of the pennant and market turns to the upside. That will be obvious development. So if market, for instance, move to the downside, wash and rinse to this low, for instance, and returns right back, that will be obvious behavior that tells you that you're wrong, and probably market still will show some deeper move to the upside. That is just more definite situation than if you will try to catch the potential retracement to the upside, whatever it will stop, because currently we do not know where it could happen and how market could behave. That's why I think that it's better to focus on the pennant directly. So still the context on the market currently probably bearish, because we see the consolidation that stands in a row with this bear trend, that is the bearish pennant pattern that suggests some deeper move to the downside. Besides, market hasn't achieved some targets that stands approximately around 132.40, 132.60 area, and very probable that the market will continue to move down after these overlapping bars. So let's see what will happen today.